in a way, China has an advantage because things started earlier and they got things under control earlier, so they can get back to work earlier. And there may be a gap of several weeks or a month between the full revision, downward revision is done, in China versus the rest of the world.
And when you think about what happens next with regards to policymakers, I mean, we've been hearing a lot of silence on that end, whether we're talking about, central bank governors, the Fed, and obviously finance ministers, even at the G20 over the last weekend. What's your take on that? Are we going to have an issue going forward?
Look, I think this type of a global emergency does not really lend itself to monetary policy. Of course, monetary policy should not become a hindrance, right? It should not block the flow of money. So, want to keep monetary policy easy, and I think central banks are willing to do that. But what it needs is direct spending. People, just governments spending money, buying stuff, right? So Hong Kong has done that, 120 billion yesterday announced. China has added 500 billion more. I think what Bank of Korea is doing is basically telling the finance ministry is, hey, this is your responsibility too. You can't just rely on us. And I think you start seeing more and more of that. Germany, for example, probably will lift the debt ceiling for local governments, at least temporarily. So that gives more flexibility for governments to spend more money. And that's more important than monetary policy because it creates real demand, and that's what we need now.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.